The stock and real estate markets are surging higher and higher. With ultra low interest rates, many are borrowing the maximum possible amount that they can get, and they're taking advantage. After so many years of rock bottom rates, it's hard to blame them. The challenge here is that whenever there is instability and fragility, there is failure. The longer the chaos goes on for, the more people will get sucked in, causing systemic damage. This is inevitable, and so people should be aware, ready, and prepared. You came here for the truth, so let me unveil that for you. What we see today, of course, is always that euphoria and mania that takes over people. It happens again and again. You as the individual, you could certainly take advantage. You could certainly ride the wave, but all the while, you should remember the absolute basic fundamentals, and you always have to be ready to pull the trigger. This is so key and so important. You do not give up control to what's happening out there. You need to be in as much control as you possibly can. If you're doing stocks, you got to set stop losses. You have to diversify. You got to put your money in different areas, geographical diversification, and so on. The same goes with real estate. If you are one of these people that simply puts your money with a syndicator, what could happen to your funds? You don't know. Your capital is at risk. You need to take as much control as you can given the situation. I could go on forever and ever, and perhaps I should in that topic, but for this one here, we're going to talk about the 1031 exchange. I'm sure you know it. If you're in the US, I will talk more about that. We're going to look at what's happening with the jobs. We're going to look at what's happening with the economy and the stock market and everything. So let's go. Initial jobless claims continues to decline, as you can see right here. That is important. The stock market is looking for good numbers to continue. This is, of course, as a result of certain places the economy has begun to open up. And while there might be restrictions on how many people can enter the restaurants and the establishments and so on, generally the trend is more opening up. And as a result, people need to get back to work. US sells debt at 0% yield for the first time since early 2020. And as you can see right here, we're looking at this period of time in which there was some change that was occurring, let's say, started to rise in about 2015, 2016, and that made its way. This is a 4-week treasury bill, looking at about 2.5% at its peak, and then it came down quite quickly, right back down to 0%. The value of the debt, of course, has basically given us the sign that there is no risk out there. You don't have to worry. You see, what happened during the Euro sovereign debt crisis, you could look at Greece and Italy and Portugal and Spain and all these different countries. There was some massive yield coming out of these bonds. And why? Well, of course, it's high risk. There was worry about the contagion and the spread and all the issues. And what do? They created the EFSF. They created the ESM. Okay, these are just letters of the alphabet. Okay, they had there was no substance to them. Okay, this is like 2 slices of bread with nothing in between. All right, so not too bad. Bread is pretty good, but you need some layer in between there, and just to be quite honest, they didn't end up doing anything with it, but they were able to calm the markets down. And now, as you can see, we're looking at negative yields in these countries. So we go from extremely high yields to negative yields, and the risk has not changed. That's the crazy part. All evidence still points to continued support from both fiscal and monetary policies against the backdrop of accelerating corporate earnings. This reinforces our view that the markets can advance further, with cyclical parts of the market such as financials, energy, and value stocks likely to benefit most from the global upswing. Any of those sectors which were not necessarily growing towards the beginning of 2020 or in the mid-2020 are going to see perhaps more benefit from all of the stimulus, from all the quantitative easing. That's the expectation coming out of the financial markets and the financial world. risk on mode. Reflation trade returns as economic confidence surges. So this is just giving us idea of what's been happening here. The dollar index has been declining as of late, but look, we're always fluctuating. We're always seeing that this is something that is in flux. It's changing. And why? Because of different countries and what they are doing. Not necessarily what's happening in the US and what the US does, but if there is what they love to call dovishness from the Federal Reserve, that will, of course, bring the dollar down. Quick update here, Credit Suisse, because of Archegos and the whole situation, I told you, as they always do, they have to burn somebody. And here we go. Credit Suisse board considers removal of risk. Chief bank directors meet ahead of potentially embarrassing shareholder revolt at AGM. And all I know is that every time this thing happens, even though the problem is systemic, even though this is an issue that's been going on for years and years and years, what they have to do is simply get rid of the CEO, get rid of this guy, get rid of that guy. And why? Because that makes the shareholders happy. It doesn't fix the problem, it doesn't correct anything, but hey, the shareholders will be happy. The rich find haven in Dubai and luxury home sale boom ensues. So this article is talking about that and how more and more people are buying in Dubai. We're talking about multi-million-dollar properties. And this here is something that they mention the stats. Okay, great. But what I wanted to know from this is that Dubai is a place with extremely low taxation. So you have a time in which certain governments around the world, many of them in fact, are imposing global minimum taxes. They're doing carbon taxes. They're doing inheritance taxes, wealth taxes. And what I want to talk about in a separate video is actually the unrealized capital gains tax. Oh, you've been making a lot of money in your stocks and the accounts have appreciated and you got $1 million there. Get ready to pay, even if you didn't sell it. Well, a place like Dubai is a completely different situation. You go there, you're not going to get taxed. Of course, there's nuances and all sorts of things, but that's what's happening. So people are going and moving their money to different places, and not just their money, but they are taking their feet and they're getting out. Why? Because they are tired of all the taxation and the expenses, and they're going to where they're treated best, as Nomad Capitalist says. This is the chart that corresponds to that information. High-end sales of expensive residential properties in Dubai hit a record in March, and you could see the trend there clearly. It has accelerated. I got a couple notes about New York, and the information is interesting because it's quite varied. There's a real difference in between some of the pieces and the others. Let me get into it. New York City will spend $30 million on a tourism campaign set to launch in June, aiming to revive a sector that had struggled in 2020. It's critical that we deliver the message that New York City is open and welcoming visitors once again. And the campaign, which officials say is being funded with federal stimulus money, the city is receiving dwarfs any similar promotion in recent memory. In typical years, the tourism advertising budget is $3 million. So we're talking about multi-million-dollar infusion here to get people to go back to New York, to be tourists there, spend the money, go in the restaurants, and so on. They want to open 100% as of this summer. We'll see if that actually happens. What I'm noting here is that when you had these closures going on for so long, certain industries were just decimated, whether that's Broadway, whether that's anything that New York has to offer. Clearly, it has been hit very hard. Here's where we have some disparity in the information I had brought you previously. Manhattan retail rents extend slide. And this is just showing you that if you look at, in this case here, they're showing you retail rents, but look at what's going on with the residential. This, the amount of inventory has declined a little bit because the landlords were offering incentives. We'll give you 1 free month. We'll give you 2 free months. Hey, don't worry about anything. Just come on in. We're not going to do background checks. We're not going to do anything. Just come on. Just come on in and have a free stay, apparently. But this is just showing you that, rents falling 20% and so on. I think it's important just to see what's been going on all over the place. And the fact that New York had been closed for so long, the damage, I think, at least, if not permanent, it's certainly going to hurt for a long time. And that finally brings me to this. I had to show you all of that to get to this point here. Not sure how many people made it this far into the video, but of course, this is really the key. We're talking about the new economic plan that will eliminate a tax break for many real estate owners that has enabled them to defer paying capital gains on property sales. Of course, I am talking about the 1031 exchange. Closing that tax loophole, which has existed since 1921 as part of his $1.9 trillion spending package on new social programs. The current law allows investors to defer paying tax on real estate gains if they reinvest the proceeds in other properties within 6 months of the sale. There are, of course, these nuances, the little details in there, but I think this is really, really key to understand, okay? And so my expectation here is that we are going to see, and by the way, we're now in the Money GPS Insights. This right here is something that investors need to be aware of, homeowners need to be aware of, and this here is huge. It is huge because the 1031 Exchange Act, no matter what book you read on taxes, no matter what book you read on real estate in the US, they always talk about the 1031 exchange. This makes it fantastic. It makes it a fantastic investment that all of these big, actual investors, real investors, not somebody who owns 1 or 2 or 3 properties. We're talking about the big boys. They use the 1031 exchange. So now if they don't have that advantage, they're going to hold on to those properties. Now, what they're going to do with that is that they're just going to, perhaps they're not going to be able to take the capital gains on that. They're not going to do that in some cases. They are going to hold on. Now, they're going to hope that they can simply refinance the property, cash out refinance. But that becomes an issue as interest rates rise. When interest rates are low, that's something they could potentially do. But there are different reasons why you would want to cash out on a property. Look, all I'm saying is that this is a big deal. This is something that we need to watch. But the average person, they're probably not going to care about it, but it's going to directly impact the price of real estate. So keep your eyes on it. Of course, I will keep you posted. This article here is talking about Las Vegas and how things are, they're trying to get people in. It's already expanding in terms of where it was. They're doing, certain levels of restrictions, but for the most part, they're trying to get business going again. I was just looking at this, and the only reason I showed you this, look at these people in this pool here. All I can see is a bunch of people that probably haven't left that pool for many, many hours. And quite frankly, I'm not sure if I would want to be in there. What do you think? SEC punts a long-awaited Bitcoin ETF decision to at least June. So they're continuing to push this. Canada and I believe other places have already approved the ETF for Bitcoin. So they're really just delaying this process. We'll see what actually happens, but at least at this time, it's still a no-go. Speaking of cryptos, you can see that Ethereum has accelerated to a new high, breaking all the previous records. And while Bitcoin has kind of been trading in this range, ETH has surged. Dogecoin, which started as a meme, started as a joke, this right here in this article here, it's talking about one particular holder of this Dogecoin, their wealth, whoever it is, surged to actually $14 billion, and then it has since come down to $11 billion. So the claim is that maybe it's Elon Musk, nobody really knows, but that's a lot of cash to be sitting on, and that money hasn't moved. So we'll see what happens. That's all for this video. If you found it informative, hit that thumbs up button. If you want to check out, how to actually learn about e-commerce, you want to sell stuff on Amazon, and you want to do that for free, I got a step-by-step course here. People will make you pay $500 for the garbage courses. You can pay $1,000, $2,000 for the better ones, or you could just learn for free via AmazonGPS.com. If you want to know about the financial system from top to bottom, you want to be able to actually have a complete understanding of the 4 asset classes, the breakdown of which, the foundation, the history, everything is in these 2 books. Check it out at the link in the description. Have you seen this video yet? If not, definitely check it out. It's right here. Click it and I'll see you there.